What's up, everybody? Austin here. It is Tuesday, July 5th. Fears of a recession, negative headlines, everything like that out there. I'm building a $1 million portfolio right here on YouTube from $10K to $1 million, hopefully, or maybe 10K to zero, depending on all these fears, and sharing every step of the way. We're at $61,125. We are down $10,866. This says minus 28%, but if you do the math, 10,866 divided by 72,000, which is what we've put in, is not minus 28%. But the bottom line is we got to make up $10,866 for this portfolio to be in the green. And so overall, that's what we're down. Let's look at the last month because this is kind of the June update. And so we were actually up $572 for over the last month. That's from June 6th to July 5th. I thought that looking at the markets today, that my portfolio would just be getting crushed. NASDAQ's down 1.5%. Let me make this a little bit bigger. NASDAQ's down 1.5%. S&P 500 is down 1.73. Dow is down 1.7. And right now, for whatever reason, the portfolio is in the green. Maybe that's because these growth companies that I own have gotten crushed so bad already. And the fundamentals, people are starting to think about the fundamentals and that long term, they're going to be able to grow their revenue. Or maybe it's going to dump and I'll be down 3% today. I really don't know, and I don't care because I'm not invested for today or next week or next month or even next year. I'm trying to build this thing up over the next 10 years. That's super boring for a lot of people. You might stop watching now, but if you want to build long-term wealth and not copy these, but just look at the process of searching, finding companies and being a long-term investor, I think you might like this channel, and if that's the case, like the video, subscribe to the channel, and it helps more people find us. Okay, you can see got 72 shares of Snowflake. Average share price of, that's what I purchased them at, 152.71. It's currently at 141.67, so we're down like $10 a share on that. Pretty much down 10%. Crowdstrike, $170 a share. We've got, or 170.32. We've got 53.25 shares. Current share price is 178.26, so we are up. Overall, we're up $662 on Crowdstrike. Datadog. Okay, you can see 82.56, 82.5 shares, 104.62 share price, and so that shows that this right here shows the price of 98.36, which is wrong. Because I was looking at this, I was like, hold on, if the average share price is 104, but the current price is 98. How are we only down 0.07%? This just hasn't updated this morning. If you look at the share price right now, it's actually up today to 104.81. And that's why this is showing only down 0.07%, whereas this price is wrong. So ignore that price for now. Anyways, that's Datadog. Gitlab, 137.9 shares, 46.60 share price. And looks like we are actually up on this. So this is showing a return of 32%, up $1,200. So didn't realize GitLab was doing that well. Rocket Lab, 1,607 shares, $4.94 per share. We're at 369, so down pretty big, down 31%. This is the one with, in my opinion, the longest term time horizon, also the highest risk in my portfolio. And I'm going to run through where I think these companies are at in terms of multiples and valuation in just a minute. Tesla, 7.7 shares, 842.77 average share price. You can see 659 is the current price, so we are down 25% on Tesla. MongoDB, 17.8 shares, 252.84 share average share price. Current price is around 270. I think it's probably up today as well. 4,984. So we're up about 1%. The Trade Desk, 112.9 shares, almost 113 shares, 49.54 share price. You can tell we're down pretty big. Down about $1,000 or 36%. Cloudflare, ticker NET, 95.79 shares, $59 average purchase price. We're at about 45. So this is showing we're down $1,200 or 23%. So there you go. There you have it. That is the cost basis for the positions. All right, let's talk a little bit about the holdings in my portfolio, their price sales ratios, and then expected growth going forward and what that looks like for potential returns. So Crowdstrike, obviously, it's down huge. It got up to a price sales ratio of 48 and a price of 284. And now we're sitting down 36% from that high to 179 and a price sales ratio of 23. Well, that's still super high, right? Well, with CrowdStrike, this is their projected earnings forecast. So this is what analysts think they're going to get revenue per share. 59%, so 49%, 35%, and then 31%. And then out here, I just put in 25% starting in 26, 27, and 28, which I think is realistic when you look at, the way companies have been able to grow revenue. That means over time that at a price sales ratio of 10, you're going to get a total annualized rate of return of 11.5%, which is, the S&P 500 generally does 8 to 10% per year. But even if that goes down to a PS of 7, you're still at a positive return. If it goes down to a price sales ratio of 5, then you're at a negative return, which again would be a long time to get a negative return. But if this company continues performing, eventually that's going to turn around and the revenue growth would take care of the share price moving forward. Gitlab's another one that's come down from a price sales ratio of almost 80, which is insane, down to 25. So a 56% loss total, or a 56% drop in share price. But if we go to forecasting, the analysts kind of have their expectations in here. Go to estimates, and then so this is showing 58% revenue growth, 39%, and this is per share, 47%, and then dropping that down to 20. I think that's fine if we want relatively, conservative estimates for growth, and take this down to a price sales ratio of 10. And so on that, at a price sales ratio of 10 over time, that's still through 2028, almost a 12% return. Price sales ratio of 10, maybe that's high, maybe that's low. That, in my opinion, is a decent baseline where if the company beats revenue expectations, which I think they'll do better than this over time, we'll see over time and track it. And I'll obviously sell if the thesis breaks and they're not performing well. Company-wise, not stock. I don't care what the stock does if the company is executing. But anyways, with a 10 price sales ratio in here, if they beat these numbers, then that gives upside to the share price potentially, even if the price sales ratio is lower than 10. That's kind of how I think about that baseline. Cloudflare, again, crushed, down 78%. Wow. It was at 211. It's down to 45. Crazy, crazy, crazy. This is what analysts currently expect. 41% revenue per share, 36, 34. They didn't have them in, so I added 25 for 2025, 2006, 2027. At a price sales ratio of 10, you're getting a 16% annualized return through 2027. Price sales ratio of 7 then would be 9. Price sales ratio of 5 would be 2.65% annualized return. So that would be taking the price sales ratio from 18 blended down to 5. You're still looking at a positive rate of return. Again, the business has to perform in order to do that. Rocket Lab, again, crushed, $18, down 80%. Expected revenue growth, 64% per share, 44%, and then 50%. Okay, so I put in estimates. So they've got 63% per share is what they think, 44, and then 50. I put in 30% for the years after that through 2027. There could be way more upside for that, or this company could totally fail. Currently at a blended price sales ratio of 9. If we go out and it's at 250, a blended price sales ratio of 250 in 2027, you're looking at an 8% annualized return. Maybe gross margins improve, space is booming, they're doing really well, and it trades at a price sales ratio of 5. You're looking at a 22% annualized rate of return. Again, highest risk position in my portfolio, in my opinion. Okay, Snowflake was up at a price sales ratio of 106, blended price sales ratio of 106, crazy. Down 62%. Company's doomed, never going to recover ever. You can never make your money back. Okay, analysts are expecting 58% revenue per year next year, or per share next year, 52 the following year, 44, and then I added 30. And so at a price sales ratio of 10 in 2028, 14% annualized rate of return for 115% total return, even down to 5. You're still looking at a 8% total rate of return. If the company's performing well, hitting all these milestones, and the stock price just trades sideways or goes down, essentially is what this is showing, then in my opinion, I would be so happy to have been able to continue buying those shares as the share price either didn't go anywhere or traded down, as long as the business was performing. And we get to a price sales ratio of 5 while revenue is growing at 30% and they're hitting their longer term operating margin. I think they said it was either 20 or 25% or free cash flow margin. I mean, if they're hitting those numbers and it trades down to a price sales ratio of 5 with 30% revenue growth, I will want to own as many shares of this company as possible. And so, like, that's how I think about these things. I I don't know what the return is going to be like for the next year, 2 years, 3 years. I'm trying to own pieces of businesses that I want to own for a very long time and then control my finances otherwise and not rely on my investments to live on for the next 3 years because I don't know what's going to happen in the market or with a recession. And so that's how I think about these things. That's how I use these metrics and try to build this portfolio. Okay, Tesla has essentially said they think they can grow revenue at 50% per year for the foreseeable future. This is revenue per share growth, again, so that takes into account if they're issuing shares or buying back shares, which I don't think Tesla's going to buy back shares unless, I just that's not part of my thesis. But 55% for this year, analysts are expecting 33% revenue per share next year, 23, and then I went down to 20. Based on what the company's saying, it should be a lot higher than that, but again, let's be conservative. Blended price sales ratio right now of 11, take it down to 5, and you're still looking at a 9% annualized rate of return. If they beat these numbers, the performance could be better than that. If it's priced at a higher price sales ratio, the performance could be better than that. And that's how I think about these things. Okay, that's an update on the portfolio. I just wanted to do like a June wrap. This is very risky. I'm not trying to pump these stocks. I'm trying to share what I'm doing, trying to build this $1 million portfolio in plain sight transparently. So people can see someone on YouTube putting their own real money into stocks in the stocks that they're talking about and showing the ups, showing the downs. And hopefully in 10 years, we're sitting on $1 million portfolio. And I would feel really good about that, not only financially, but also if I had shared the journey along the way and shown the positives, the negatives, the risks. And again, not recommending this for anybody, but just trying to show what this process could look like.